It's not the big moments that usually define your financial life. It's the quiet ones, the ones no one notices. No celebration, no rush, no story worth telling. Just small, almost boring decisions that don't feel like they matter that much in the moment. And that's exactly why most people overlook them. Because when we imagine financial success, we picture something more exciting. A big opportunity, a smart investment, a perfect timing decision that changes everything. Something that feels like progress. But in reality, it rarely looks like that. Most of the time, it looks like saying no to something small. Waiting a little longer. Doing the same thing again, even when it feels repetitive. And that doesn't feel like winning. It feels like nothing is happening. There's a strange disconnect between what actually builds financial stability and what feels like progress. What feels exciting usually gets our attention. A sudden market opportunity, a new way to make money, a better strategy that promises faster results. Even just the idea of doing something different can feel productive. It gives you a sense of movement, like you're taking control. But feeling in control and actually making progress aren't always the same thing, because excitement often comes from change, and financial stability usually comes from consistency. Think about how most people approach money when they first decide to get serious about it. There's this burst of motivation. They start researching, watching videos, looking for the best approach. They want to optimize everything, find the smartest path, avoid mistakes. And that makes sense. But underneath that, there's often a quiet expectation that if they do this right, something should happen. Something noticeable. Some kind of visible progress that proves they're on the right track. But the reality is much slower than that. And that's where frustration begins. Because the actions that actually work don't feel impressive. Saving a portion of your income every month. Not increasing your lifestyle every time your income goes up. Investing consistently, even when it feels like nothing is changing. Avoiding unnecessary risks, even when other people seem to be moving faster. None of this feels exciting. There's no instant reward. No visible shift that makes you feel like you're getting ahead. In fact, sometimes it feels like you're standing still, while everyone else is doing something more interesting. And this is where a lot of people quietly drift off track. Not because they lack discipline, but because they start chasing a feeling. The feeling that something is happening. So they change strategies, try something new, look for faster results. They move money around, take bigger risks, follow trends, not necessarily because it's logical, but because it feels better than waiting. Because waiting feels like losing. But here's the part that's easy to miss. In finance, the things that feel slow are often the things that are working, and the things that feel exciting often come with hidden instability. That doesn't mean all excitement is bad, but it does mean that excitement isn't a reliable signal of progress. Sometimes it's the opposite. Think about someone who quietly builds wealth over time. There's no dramatic story, no perfect investment, no sudden breakthrough, just steady behavior. They earn, they save, they invest, they repeat. Month after month, year after year, it's predictable, almost boring. But underneath that repetition, something powerful is happening. Small actions are stacking, decisions are compounding, and over time, the results start to separate. Not suddenly, but noticeably. What makes this difficult is that consistency doesn't give you emotional feedback right away. You don't feel rewarded for saving instead of spending. You don't feel progress after 1 month of investing. You don't feel different after making a careful, low-risk decision. So your brain starts questioning it. Is this even working? And when there's no clear answer, it becomes tempting to look for something that feels more certain, something that gives you a quicker response. But the truth is, financial systems don't reward intensity, they reward consistency. It's not about how motivated you feel in one moment. It's about what you keep doing when nothing feels different. And that's where calm, boring decisions start to win. Not because they're exciting, but because they're sustainable. There's also a kind of quiet strength in choosing stability over stimulation. In a world where everything pushes you toward more spending, more upgrading, more chasing, choosing to stay steady can feel almost unnatural. But that steadiness is what creates control. When your decisions aren't driven by urgency or emotion, they become more predictable. and predictability builds momentum. A simple example of this is lifestyle inflation. You start earning a little more, and naturally, your life expands with it. Slightly better food, slightly better experiences, slightly more comfort. Individually, none of it feels significant, but over time, it keeps you in the same place, because your spending grows at the same pace as your income. Now compare that to someone who keeps their lifestyle relatively stable. They still enjoy life, they still spend, but they don't automatically upgrade everything. They allow the gap between income and expenses to grow, slowly, and that gap becomes their leverage. Not overnight, not dramatically, but steadily. This is the turning point most people don't expect. Financial progress often feels underwhelming while it's happening. There's no constant sense of achievement, no daily reminder that you're getting ahead. It's quiet, and because it's quiet, it's easy to underestimate. But then, at some point, something shifts. Not in a dramatic way, but in a noticeable one. You feel a little less pressure, a little more flexibility, a little more room to make decisions without stress. And that didn't come from one big move. It came from hundreds of small ones. When you start to see this clearly, your priorities begin to change. You stop chasing the most exciting option, and you start trusting the most repeatable one. You stop asking, what's the fastest way to grow? And you start asking, what can I keep doing, even on a normal day? Because normal days are most of your life. Not the motivated ones, not the perfect ones. Just the regular, slightly tired, slightly busy days. And whatever works there is what actually works. In practical terms, this doesn't mean doing less. It means simplifying. You might set up systems that run in the background. Automatic saving, consistent investing, clear boundaries on spending. Not because it's impressive, but because it reduces the need to constantly decide. And when decisions become easier, consistency becomes natural. You also start becoming more comfortable with the idea that progress doesn't always feel good. Sometimes it feels neutral, sometimes even a little boring. But that doesn't mean it's not working. It just means it's stable. And stability is what allows everything else to grow. Without it, progress becomes fragile, dependent on mood, motivation, and external conditions. With it, progress becomes steady, less exciting, but far more reliable. And that's the part most people underestimate. The power of doing something simple. For a long time, not perfectly, just consistently. So, if your financial life feels a little uneventful right now, that might not be a bad sign. It might mean you're finally doing the kind of things that actually last. And even if it doesn't feel like much today, give it time, because the quiet path is usually the one that leads somewhere real.